I have traded professionally for over 10 years, but options still took me about 4 years to learn properly. And what I'm about to hand to you is a system that does the hardest part of becoming familiar with options, because the honest truth is that the structuring, the choosing of the strike prices, the spreads, the where do you break even, how much money you can make with these option structures, and the probabilities of all of this comes down to just simply mathematics. And a computer can run that calculation for you faster and more accurately than even a PhD level mathematician could ever do. So, what I'm about to hand over to you is a simplified version of a system that I am using to bring trade ideas alive, where you bring the trade idea and you let the AI help with the structuring of that trade itself by mathematical calculations for you. And together, you actually come up with a trade plan. Sometimes the verdict might be this trade doesn't even make sense to take because the risk reward doesn't make sense. It doesn't add up. And that's sometimes the most important thing any framework can give to you, which is to say, honestly, this is just not a good trade to be taking and to move on. And in this video, I'm going to go a step-by-step guide on how to use it. What we'll start with is the following. This is a prompt structure document that you will find in the description of this video, and I'm going to walk through step by step how to actually apply it. Now, you are going to need some sort of an AI to be able to actually use this. Whether you're using Claude, whether you're using ChatGPT, both of them will do it. I am personally using Claude for this. I've already pre-prepared an entire flow of chat on how to exactly I'm using it on an example on QQQ. We'll walk through that step by step. The first thing that you will do is that you go here, you click on a new chat, you'll come to the document, and you simply click on this copy prompt. And that's going to take the prompt right away, copy paste it, and we'll put it here. Then you press enter. Now, again, I already have this flow prepared because it's going to take some time for this to load, but we're going to go through this flow step by step. So once it has the prompt, what it essentially does is that it's going to ask you a few questions about the actual thing that you're looking to trade, and you're going to need to have to provide some context on what is the trade idea that you actually have, and then the flow is going to help to ask the right questions for us to be able to determine whether this is a trade idea that makes sense and what will be the best possible structure to actually go ahead with this trade and to take it. So in this case, I choose as an example, as you can see, it's asking what is the ticker and do you think it's going to go up or down? It just determine, are you trading to the upside or to the downside? In this case, I'm looking to trade QQQ to the downside. So let's say this is QQQ. You can see here the ticker symbol of what you're looking to trade. And I'm trying to bet on the downside for this case of this example. The next question is going to say, okay, that will likely be a put debit spread where you buy a put, sell a lower put. It's going to be relevant later on. The second question is, what is your price target? And by when do you expect this to happen? Now here, you want to be as specific as you can be with your actual idea itself. Ideally, it's fairly straightforward. And to me, I just put that QQQ to have a correction to 650 by the end of October. Again, this is just an example trade idea. You incorporate here whatever trade idea you personally have when it comes to trading this and your own thesis that you built for that. This is a prompt that helps you with the actual structure of it so that you're taking this investment or this trade the best way you can do based on mathematics. And then you can see it's saying QQQ at 650 by end of October, noted. And again, it's not judging anything yet, not creating anything, because we still need to input the real market data to be able to make these calculations. So this might be a new thing to a lot of people if you haven't looked at options chain before, but where I would go is to go to barchart.com. And as you can see, this is the website. And we are going to search for the symbol that you'll be looking to trade. In this case, we're looking at QQQ. And on the right side here is already showing options where I'm going to click right away. And here you can click directly into the chain. Another way of doing it is just simply choose QQQ. Right here, click on the actual asset. And on the left side, you will see options prices right here, where I'm going to click right now. And there we go. We ended up at the options chain. I'm not registered, so it's going to keep popping up, but this is all free information. There is going to be key data that we need to input into the AI so it can make those mathematical calculations. And what are those important dates and information that we need to input here? So if we come back here, the prompt is already going to give us context on that of what needs to be done. So first things first, it's going to say, please copy paste the options chain for QQQ November 21 expiration. So I come back here and I come to the expiration. And if you go here 2026, whoa, hold on. There's not even November here in this case, so you couldn't even choose that options chain. What you can do is you can simply come, you can take a screenshot of what you see here, you drop that screenshot into the AI again and say, hey, look, these are the only options that we can choose from the expiration. Which one is the one to go with? And I'm going to explain why, but essentially just said, take the December 18th options chain. Great. So I'm going to come here and take the December 18th options chain. And it's going to ask me, okay, I would like to see the options chain for that expiration. In this case, the put side is the important. And where you see that is right here, calls. Again, if you're trading to the upside, you will need the call chain. If you're trading to the downside, you will need to input the puts chain in here. And there's one more very important piece of information that we'll need to take a screenshot of, which is this stop bar right here. It shows the IV rank, historic volatility, implied volatility, and again, just to confirm the expiration date. So I would go ahead, screenshot this, and then I would just simply drag and drop this again into the AI. So we have this information. As you can see, I've already input that right here. And the second picture that I'm going to put in here is the actual data from the options flow itself. So what I'm going to do is I will come down here and I can already see that because the strike price that I was looking for is 650, it doesn't actually show up here. And the way to extend this options flow list is that you simply click on adding more strikes. You can put 20, you can put more. In this case, this is really all we need. And again, I'm going to come here, I'm going to take a screenshot of this, and I'm going to come back to the AI, and I'm going to drag and drop it into here. And then both of these two together are in one prompt. You simply press enter. And as you can see, it will be thinking for about 2 minutes to run the calculations. But it's going to say the chain is received. And now before I build anything, here's what the data is actually saying. Currently, this is the price of QQQ. It's going to pull it from live market data. The target is 650 by end of October, which is a drop of about 10%. The expirations, it starts putting the trade ideas and everything slowly together here, running the numbers where, again, with options, when you're new, you want to kind of understand like what all of these things mean, because in the beginning it's just like, okay, what is ATM, what is a straddle, what is an IB rank? And this is great because here this explains everything for you already, what all of these data points need. So as you're doing it already the right way, or at least a much better way, you're also learning what some of these things mean. For example, IV rank is an implied volatility that the market is forecasting of a future movement that is already baked in to the current options prices. So again, it just slowly explains to you. Then what it's going to do is that it's going to create the actual different ways to structure these trades. And the way the prompt was designed is to give 3 options. One of them is going to be a low risk way, which is usually the highest probability way to get a win out of this trade idea. And it creates estimated chance of profit, break-even price, risk and reward, maximum loss at like $1,000 contract, and so on. Then it's going to give you a medium risk one, which is like less probability, but higher chance of actually winning. And the probability is being calculated based on, again, estimations of mathematical data that we can pull currently from the options chain itself. And C is going to be the higher risk version, which is if you want to take the highest possible way to take the trade, because let's say you have an extremely high conviction in this yourself and your thesis is super solid and you're like, I'm okay to take the risk and I think it's a high probability trade, so I'm going to go with that option. Then it gives you basically just 3 different ways. But this is not all. Like, this is where the magic happens, because this is just the first draft of your actual trade idea itself. It's actually giving a 4th line as well in this case, which is like the riskiest, highest upside version. And then it's going to show you what will be the profits and loss at each expiration. And this is the part where it's time to go back to your sheet, because now we have the draft structures of each of the options trades. And it's time to start creating the actual trade plan that we can align to determine, now I have 4 options. I don't need 4 options. I want to have 1 option, which is based on mathematics, probability, and statistics, is the highest likelihood to give me the best risk and reward bet in the market. So again, I'm making decisions here based on structuring a trade idea using mathematics. So here you go again, copy the prompt, you come back into this, you copy paste it, and you press enter. Again, in this case for me, I already have it here. As you can see, I copy pasted it right here, pressed enter. And one thing I have inputted here, which is it's going to ask you, what is your portfolio size and what is my maximum risk per trade is as a percentage. So in this case, I put for this example, my portfolio is $1 million and my maximum risk per trade is 1%. And what's in this prompt is essentially gates. What I'm trying to do here is I'm trying to disqualify all the poor structures that don't make sense, because if I'm risking, let's say $100,000 in a trade, I want to have an upside of at least $200,000, $250,000 on the trade versus I don't want to risk $100K to make $60,000. Like that's, to me, from my perspective, is the wrong approach to taking trades. I would rather just not risk $100K to make $50K at that point. And this also calculates how expensive the options chain is itself and whether it even makes sense, because sometimes with options, one of the things that you might find is that you have a great idea, but the options market has already priced that move in so much where you taking that trade is not going to give you a return on the risk you're taking that actually makes sense to take based on, again, mathematics. So what it's done right away is that it actually has disqualified the very first spread based on the risk reward rule of at least 2.5 to 1, the trade. So I already know that this is not an option for my trade moving forward, and I have structure B and I have structure C left to evaluate. Now I can also see that the difference in terms of like the cost of how much it would be to get into this contract is higher in option B. It will be lower in option C. The upside in option C will be higher, and the upside on option B is slightly lower as well. But these two have passed the criteria. Now we are going into the IB rank. It's saying options are slightly expensive right now, so you're overpaying, but it's still not at a rate where it wouldn't make sense, because the risk and reward is still good, and there's still enough upside potential for display to pass the gate. Essentially, that it's expensive. It's a flag to understand that you're slightly overpaying, but it doesn't disqualify the trade idea itself. And then we go into gate 3, which is the price check of the actual debit spread width. And I might be using a lot of like complicated words here. Again, if something is not clear to you, you can always ask the AI to be like, explain to me what is happening at gate 3 in very beginner language. I don't understand debit spread width. And then you press enter, and it's going to explain to you essentially what that is if something is not clear in this case scenario. But what this has done is that it has identified a ratio which is within the normal band, and that again helped me to fine-tune my trade idea to go with option B, which is a 690, 650 spread on QQQ. I also mentioned $1 million portfolio with $10,000 risk. What it's going to do is essentially it just calculates for you your position size, which is I'm going to be buying 9 contracts for the price of $9,342 in this case. So that's going to be $660 that I'm not using from the 10K of my trade risk. And my max profit, if 650 expiration, will be around $26,000 on this trade. Now, because all of the structure have filled all the gates and the filters that disqualify all the bad trade ideas. And again, if you look at any like institutional traders or professional traders, one of the most important part of your process is to determine, should I be trading right now? And does this trade make sense? This can significantly improve your chances as an options trader to at least eliminate some of those bad ideas that you have, or to help you to structure even the good ideas you have in a better way. So that's it. It's going to show you basically buy 690 put and sell 650 put in one order. And yeah, this is the verdict. And there you go. In this case, before we get to the full trade idea, I always like to ask myself, is there any price where I would say my idea is simply wrong and I want to stop loss out of my position? And a lot of times we have that in the market when you see like, okay, it's a key level. I want to end this trade. I would already predetermine that before I enter the position. And the second question I like to ask myself, sometimes what happens is you enter these trades and they right away start winning, and you're up 100% on this contract a few weeks within entering. And then you have the choice, like, am I going to hold it all the way to the end, or am I just going to take profits here? And generally, I have a rule of thumb, which is that if it's a trade that's more like a higher risk, and if it's up 100% right away, which means I doubled my money, I immediately take out my initial capital from that. But in this case, I think for the example I put, I have no stop loss on this position. I'm ready to write it to 0 or ready to win, and I just simply plan to hold the position until mid-October. If the move doesn't happen until then, I will just manually close the remainder of this position. And with that, again, it gives you an overview of everything else, and it's going to explain again how to place this order itself. Now, this is basically it of a simple way to use AI with 2 very well-structured prompts to how to structure trades. Again, this is a prompt that helps you to decide and help you to validate trade ideas, not necessarily a flow that decides for you. It just helps you to structure an idea that you already have so you can understand what you're doing, what you're risking against what chances are you risking money so you can make informed decisions in the market. And that's the most important thing when it comes to trading. It's not like, oh, I'm going to make money. How are you expecting to make money if you don't even understand what is it that you are doing? So again, it's not financial advice. I'm just giving you a basic framework that I think anyone can apply to trading options and significantly level up your current processes, especially as a very beginner investor. So last thing I want to say is zackbakos.com is where my newsletter is, where I'm sharing every week a 3-minute market memo for people who are learning investing, for people who are excited about the markets and the opportunities that are there. And if you want to get access to more alpha and information like this, or some of the things that I am personally investing in real time, then make sure to check this out, zackbakos.com. Just put your email in here and sign up. Peace.